Hey, we just finished going through the ETF type stocks that I've been tracking. And so I just wanted to share uh, what I think will be the top three, or at least the three that I'm most interested in at this point right now. So, what we have on the screen here, the full listing. These are all the ETFs I'm tracking, so they're meant to be in sectors. And then, of course, we have VOO, which is the top 500, QQQs in here. Um, but the method behind this is number one, these green ones, those are the ones that I felt are very close, or at least close enough to a buy point for me to take that next step. And so I do have the buy points listed out in this column. These ones, again, were the ones that, at least to me, made that first cut where it's close enough to one of those buy points to actually consider making the purchase. So we had SOXQ, which is semiconductors, XLF, the financial sector, XLE, energy, and those are the top three, by the way, in order. XLI, that's industrial, IWM, that's Russell 2000, and XLV is healthcare. Those are the ones that right now, those are the ones that I would just even first consider buying. And then the next step that I did to actually rank them was I made this potential uh, by the end of the year, what I thought it might, uh, could, what the value could be by the end of the year. And so if we just take a look at SOXQ, which is currently on the screen, you can see it's currently in this uptrend. And for right now, if we just kind of assume that uptrend continues, and for my sake, I said I kind of feel like this might be even conservative, just based on the uptrend. If that uptrend were to continue by year end, who knows? This ETF might even be like high 30s. But for me, my potential by end of year, I say it has a good probability of reaching 31 again. And so that's this black line we have marked out. It's reached that point before at the beginning of 22. It was there. I think by the end of the year, it's definitely possible to get there. If it does get there, that's going to land us a 29% return right now. If we buy right now at about $24 and it reaches just 31, that's 29% return in 1 year. Not even, really like 8 months. The next one is XLF, which I had at 16% potential by the end of the year. So XLF. Looking at this one, there's not really an uptrend right now. Again, it seems to be consolidating between these markers that I have. So the green would be like the lows or the very optimal time to buy. And then we have this fair value range, which it seemed to just collect a lot of weeks within that range between 34 and 37. And then it seemed to peak at 40 with a couple weeks in between, which at this point that was late 2021, like November, December of 21. If we look at it right now, I think the damage has kind of taken place. Those regional banks kind of they got destroyed, purchased. They're either just gone, no need to worry about them anymore, or someone stepped in, bought them, and now they are that new bank, that 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 bank that purchased them. So this damage, I kind of think that's probably going to be over, and I think we'll now just start to kind of tread trend sideways to up. And so for this one, I said 37. So 37 would be the top of this fair value range. I think that's very doable to get to 37. If it does get to 37, that would give us a 16% return in this about 8 to 9 month window. If we update it to show just 34, let's see what that does. I mean, that's probably going to be nothing, in all honesty. If we update it to 34, that still would kind of put us in the top three. So right now if it were to just meet 34, that's 6%. That still gives us the top three. If we take a slightly more conservative route, so instead of having it 37, if we were to just pull that down to maybe here, that's still 37. If we pull it down to here, 36, that's a tighter window for us. If we were to just pull it down to say 36, just update our formula here, 36, we're still going to get like a 13% return. So for now, I'm just going to keep my number at what it is, at potentially 37 by the year end. And again, that'd give us a 16% return. The third, the one rounding out the bunch, is the energy sector, which is ticker symbol XLE. This one, I currently am projecting about a 14% return between now and year end. And again, that is potentially being very conservative for this one. You can see the purple upward trend line that it's currently in. It's been that way since 2020. It's been locked in this uptrend. I think why this uptrend could continue would be that latest OPEC response to the economy. They want to cut the barrels produced by like 2.5 million barrels a day. They want to cut that every day for the next year. I guess technically I think that starts beginning of next year. So companies will probably start to ramp things down. Either way, when this happens, I have to imagine that, and someone brought this up to me, that those companies, their profit margin is probably going to get a lot bigger. And the point that was made is, or at least the way I interpreted it, is these companies, they're now used to earning so much revenue, whatever that might be. We'll just say $100 million in revenue. They want to continue making that much money. And so if they're now forced to produce less oil, which the only reason they would produce less is because this government entity is telling them to. It's not because the demand isn't there. The demand is there. So if you're going to take the supply down, even when there's already high demand, you can still keep the prices high, and in fact just make them higher, so that way you can maintain the same revenue while reducing your costs, which is going to make your profit margins just continue to grow wider. If that does happen, that means all the companies that are in this energy sector, their financials are going to look better and better. Quarter after quarter, they're just going to keep getting better. They're going to show more and more net income. So this is very likely, in my opinion, that this might even be on the low side. So for them, I chose a potential end of year value at around 97. If we just kind of zoom in a little bit again. So 97 by year end, that'd be around here-ish. So that would be roughly the bottom end of this current uptrend by the end of the year, would be 97. I feel like that, that's not actually as conservative as I thought. I thought I picked a point somewhere in this gap, but still, 97, that would be the very bottom of this uptrend. That would give us 14% return. I still kind of think that's conservative. We'll see how it plays out in the end, of course. This is just a projection. Things can obviously change. One thing that I will enter is, let's just say it tops out at, we'll say 91. We'll round up to 92, but we might even just do both numbers. If we were to choose, we'll take the smaller of the two. If we update it to 91, we're still going to get a 7% return, which is pretty good for an ETF. If we bump it up to 92, now we're at 8%. So it's, for every dollar, it's about 1% at a certain level. So I think it shows promise to me. But yeah, let me know what your thoughts are. Do Do you think this will happen? Do you like my picks? Do you think one of these others is going to outperform that I just didn't catch? Keep in mind, the reason why these are my top three right now is because not only do they have potential to grow by the end of the year, but they're also at good buy points right now. As this video is coming out, it's at a decent time, in my opinion, to buy. Others might do better. I just heard how consumer discretionary might do very well later this year. Same with technology. But right now, based on the buy point and potential end of year percentage growth, I like these picks the most. We'll see what happens as time goes past. I'd like to do this every time I go through a cycle of a category, in this case ETFs. I'd like to reevaluate, and that way, when it comes to the next trading day, I'll have my list, the ones that I feel best about right now. And so, anyway, I hope you enjoyed this, and let me know what your thoughts are in the comments, and otherwise, like, subscribe, and I'll talk to you later.